how I ended up getting into Purpule, because I did 1, 2, 3 interviews and all of it went bad. Find a way to make it easy for people like me to be able to come in and buy a bond without thinking. Broadly speaking, there are two regulators who most of my customers end up dealing with. One is RBI, the other is SEBI. Whatever is working for you today, incrementally better. I think that's where the innovation is coming in. So in terms of cost saving, in terms of simplifying the journeys, in terms of reducing clicks, or being able to get more data from the same number of inputs, is probably going to be the game. Just keep hustling. Let's figure out a way to build profitable businesses and get exits for founders.
Hi, welcome to On Tap podcast. Today we have Raunak. He's the founding member of Decentro, a YC-backed startup. Today we'll uncover his journey as a business generalist building this B2B fintech. Hi Raunak, why don't you just say hi to the audience and then we get started?
Hey everyone, hi. And hi Soumya, great to be here.
Yeah, thank you so much for taking time out today. Raunak, let's start first by understanding your journey and what led to this current role as founding member at Decentro and how everything is going.
Oh yeah. I think today when I look back, it's very easy to connect the dots of how things happened. But it's been a fantastic journey. I think I've been super excited by a lot of the work that I've been doing over the last nearly a decade now. So like you mentioned, I'm a hardcore business generalist, and I've really been excited by the kind of freedom that you get to work at early stage startups. So my journey started way back in 2015 when I just graduated from college. So I did a BBM, and I had done a couple of internships in my college days, and I was trying to figure out what do I want to do. And one thing that was very clear to me at that point was that I really wanted to learn and grow fast. So the early stage startup game seemed to be the most ideal fit for me. And around that time, my father was just starting up. So it was very ideal for me to just join him and learn the ropes of the trade from him. So I think about 1.5, 2 years closely working with him on Zelpmock, which was basically a startup incubator slash accelerator, where I did everything. So we had a lot of startups come to us to build the tech for them, but then we used to also help them with the business elements of it. So that's where I started doing wireframing. I understood how do you develop a platform, how do you take a product and go to market. And at that time, I didn't know that the term for this was go to market. Right? It was like, how do you launch this? Okay, so we need to determine whether there's a sufficient demand for this in the market or not. So do you want to go around, talk to the customers, talk to prospects, and understand what do they need, and accordingly build the wireframes according to what they're asking for and stuff like that. So that experience with Zelpmock kind of laid the foundation for my generalist roots. So I did a lot of things. Like I mentioned, one was the project management element. The other was actually door-to-door sales for a lot of the companies that we were working with. The other was scaling up operations. And all of these different experiences kind of exposed me to different elements. So we had SMEs, we also had FFMCs, which are basically your money changers, if you want to convert INR to dollars or whatever. Then we were dealing with adventure operators. We were dealing with other basically homeowners who wanted to put up their homes onto a platform to sell their homes. We were dealing with truck operators, fleet owners.
Wow.
So very, very, very varied, right? So that's kind of where it all started for me. So I spent a good 3 years working with my dad, and then eventually this whole itch of, okay, what's happening with the funded startups? What's life like at a funded startup? What is it like to build and scale fast? Because all these startups that I was working on earlier were all bootstrapped and they were going very slow. So that's how I ended up getting into Purpule.
Okay.
And there was a very, very interesting story about how I ended up getting into Purpule, because I did 1, 2, 3 interviews and all of it went bad. Right? I ended up getting rejected, and then I called up the founder. I said, your people don't know how to hire.
Oh, wow.
Right? So you really need to take me there. And it was very interesting. So I did that. And I was with them for about just under 2 years, where I got the chance to do whatever I wanted. So luckily, the founders were very, very flexible. They're like, let's figure out what problem statement excites you. So started by launching a couple of products that they'd worked on. So started off with this very exciting self-checkout product for retail. And then moved into a corporate Swiggy kind of a situation where we were trying to help corporate employees to order their food without standing in a line, and even collect their food without having to stand in a line. And you've seen how it is in these large offices where tens and thousands of people, end up coming to the cafeteria
At the same
at the
time.
same time,
Yeah.
right? So we were solving that, scaled up that business nationally across, I think, 6 cities. Uh, I was managing a team of 75 people on the ground, getting all of this moving parts in order. And then I got into helping them expand to Southeast Asia and Middle East for the retail point of sales software that we had and the solution. So all of this was like a fantastic whirlwind of an experience where we scaled up and then we hit a couple of issues and then we figured out how to make money, how do you reduce costs, all of that.
Yeah.
And finally, Decentro.
Okay.
And with Decentro, it's been 4.5 years of slowly and steadily building a fintech startup, a B2B fintech startup, through a lot of turbulence, right? First it was COVID, and then it was like this whole funding summer, and
Yeah.
then the winter,
Yeah.
and also the regulatory winter that's currently going on. So, yeah, this has been my journey.
Great. Can you tell us more about Decentro? What exactly does it do? What is the product all about?
Sure. So, for you to think about Decentro, think about the infrastructure that fintechs and lenders and essentially people or companies in the BFSI space require.
Yeah.
So, as an infrastructure company, we solve three key problems. One is a KYC and onboarding solution
Yeah.
that we have, which makes it very simple for companies to incorporate KYC elements into their onboarding journeys. We are also an RBI licensed payment aggregator. So, we help with collecting money on UPI. And the third is a debt collections platform where lenders who have basically given out money are able to manage their entire collections workforce and also all the work that's going on into collections, whether it is calling agents who are making phone calls to the defaulters or if it's on the ground.
Yeah.
So all of this basically rolled into one platform to effectively manage your collections.
Got it.
So that's what we're doing.
Understood. So you also run this podcast called the Fintech Quotient, where you invite various industry leaders from the fintech industry
Yeah.
across different domains, problem statements, and sectors. Can you tell us some interesting insights that you've heard or any interesting trends that you're seeing upcoming in this space?
Oh, yeah. So I think I've done 10 episodes so far, and I've tried to cover a breadth of companies doing different things, right?
Yeah.
From early stage companies. And you also know that
Yeah.
we've had a chat with Nishchay.
Yes.
And we also want to cover a lot of larger companies and how life is at large companies, let's say like a small case, like a Paytm Payments Bank and so on. I think what's very, very interesting is I have been very exposed to what's happening with KYC, what's happening with payments and stuff like
Right.
that. But then when you think about problem statements that are present and which are open for or ripe for basically solutioning and disruption with cross-border payments and a very, very unorganized sector like SMEs who are exporting services, you don't even think of that every day, right? So when I spoke to Movin and I understood that, how difficult it is for an SME to procure that $1,000 payment from their customer in the
Yeah.
US, right? I was like, it's pretty mind blowing. My episode with Aditya from Harmony about the whole bond market in India, I understood that while different sectors of the same market, when you're looking at securities in India, are so digitized, you have demat accounts, you have like a price feed which gives you the price of every security.
Right.
For the bonds, it's just not there, and it's completely offline.
Yeah.
So you have to make calls. There are traders, there are brokers, and then all of them have their own back office, which sometimes is running on Excel.
Yeah.
Right. So these are the kind of solutions that you don't get to see when you're doing the things that you and I are doing. So I think it's been pretty mind blowing. Other than that, I think in terms of some of the newer companies that are coming out with products, like how you guys are helping investors to diversify their portfolios, there are companies that are coming in and basically taking up currently solved problems but trying to solve them with a new flavor.
Yeah.
Right? So KYC is a largely solved problem, but how can you incorporate fraud detection elements into it?
Yeah.
How can you incorporate alternative data into it and figure out how to give you a red flag when a customer is going through your journey then and there.
Right.
So it's super interesting to
Interesting.
see the breadth of solutions that are being built for the Indian fintech market, and to see the kind of founders who are coming in and building new products and companies.
Great. Funny that you mentioned about the bonds market, right? And that's one thing which we have at Tap Invest
Yeah.
looked at very, very closely. And I believe the way we like to think of it is bonds market is still stuck in the 90s.
Yeah.
That's
Yeah.
the current
Yeah.
state of affairs right
Absolutely.
now. What have you explored or what sort of intrigues you about the space? Where do you see that headed?
So I think definitely in terms of the back end, because with my experience, I've started thinking a lot about how do things work, or
Right.
what orchestration is going on behind the scenes, right? So there are so many different players, but there is not a single platform that they're all able to digitize everything end to end for them, right? From their reporting to their calculations to basically managing their orders and money movement, all of that, right? If there could be a platform that was able to manage this single-handedly for them, including wiring the money when you want to make a purchase or settling the funds, all of this, including determining the price. Because, for example, I think I was listening to the podcast again, and I realized that price setting is broken,
Yeah.
right? So let's say I want to buy a
There's a lot
bond.
of arbitrage.
Exactly, right? So if I want to buy a bond and I want, let's say, a 15% coupon, hypothetically, I'll tell you that, and let's say you'll go to the folks that you deal with and you buy it at a certain price, you back calculate the numbers to
Yes.
figure out this thing. So, I mean, it also kind of leaves you with a question as to, hey, am I getting the best deal?
Yeah.
Right? Am I leaving money on the table? There's no transparency.
Yeah.
And also, because of all of this, there will be a ton of operational issues that the teams will face as well, which hinder the growth of the companies that are in this space. So I think for somebody to come in and build this entire operating system, if
Yeah.
I were to call it, for enabling B2B, B2C use cases on bonds would be pretty interesting. I think SEBI is already taking a lot of steps in that direction in terms of helping with discovery, the online bond platform
Right.
license, all of that is coming. But I think it needs to go one, two
Yeah.
steps further.
I think so. The way we like to think of it is it's just the dawn, right? And things are just starting to shape
Yeah.
up. Good thing is a lot of players in the industry, as well as the regulator, are realizing the
Yeah.
value of the product and the industry
Yeah.
overall.
Yeah.
And enough actions are being taken, although there's a lot more work that needs to be done
Needs to
still.
be done.
In fact, when you mentioned about the back-end operations or the infrastructure part of it, I got reminded of the daily task where a person is just dedicated doing this day in and day out, right? Opening the NSD portal, seeing when it's working, when it's not
When
working,
it's
and
not
the
working.
website can just
Yeah.
vanish. And you
Yeah.
can't do
Yeah.
anything about it.
And
Um,
we are done with 2024.
Yeah,
right? And
yeah.
this is the state of affairs.
Exactly.
And although now I think there'll be a lot more retail participation
Yeah.
because the face values have been brought down and
Right.
it's more accessible.
Correct.
And I think we should find a way to make it easy
Yes.
for people like me to be able to come in and buy a bond without thinking.
Right.
Today,
right.
it's very easy for me to buy a share. It's very easy for me to invest in a SIP or a mutual fund.
Yes.
Same thing should be for others.
Absolutely. And although education is also one role which plays, but in the case of equities, for example, we've seen the moment you solve for accessibility or you make the first investment easy and then the trade easy, education follows
Exactly.
as well.
Yeah.
So
Yeah.
so
Yeah.
that's also an interesting
Yeah.
thing to
Yeah.
note. Great. We also you mentioned about the regulatory winter, right?
Right.
Can you go deep into that? How is Decentro affected, or the various fintechs that you've spoken
Fintechs.
with affected by?
Yeah, I think there are two things that I've observed, right? And kind of put sticking my neck out here, making a few statements, but then I think we need to really
Address this.
speak our minds, right? So, look, broadly speaking, there are two regulators who most of my customers end up dealing with. One is RBI, the other is SEBI.
Yeah.
Most of the people in the wealth tech space have always come to me saying, hey, the reason I've not been able to pick up the integration is because SEBI came up with new guidelines and we need to do something to cater to that or to make changes in our system. And what I've observed is these guidelines keep coming in perpetually. So every quarter there is something big that comes in,
Right.
which means that you running an investment or a wealth tech platform have to drop everything
Yeah.
to basically be compliant
Comply.
with the new guidelines that have come in. I don't know what is the kind of interaction that these players are having with the regulator to be able to say that, hey, you know what, these are the things that we are working on, these are our goals
Yeah.
over the next 1, 2, 3 years. And how can regulation and the industry work together so
Yeah.
that it's not hampering your growth, right? I think that is one thing on the SEBI side of things. In terms of RBI, while I think there is a significant lack of trust between the regulator and the industry players. So the regulator tends to believe that, hey, you know what, for us to really control some situation from going out of hand, you need to act fast,
Yeah.
which ends up coming out with regulations which hamper business, right? And there is no confidence that, let's say, and let me not say no confidence, but there's a lack of confidence in building a product or in going down a certain path and committing resources, money, time, uh, employees being hired for a certain project, because you don't know when the regulator will turn around and say, hey, you know what,
This
this
is
is not
not the
allowed.
way. Yeah.
And that this is not allowed doesn't come with a timeline for you to comply with many times,
Yeah.
right? Many times it's overnight.
Yeah.
Many times it is a complete stop of doing business. I think if I were in their place, and obviously I don't have complete context in the way they operate, and they operate the way they do for a certain reason. But the only thing that I would really like to see differently is essentially having a sort of a sandbox that works, where people can come in and experiment. And let's say there's a gray area, there is consultation to kind of change it to black or white,
Yeah.
so that there's clarity for all parties involved. Because there are so many investors who are there in the space who have lost money. There are so
Right.
many products and founders who are building, but they're not really able to scale up. And at the same time, there's such a huge market in India
Yeah.
which needs to be addressed. And these kind of hurdles can just delay the adoption or financial inclusion.
Right.
So I think we're all working towards the same goal. It's just that we have different ways of looking at regulation or compliance. And if there is that two parties coming together to figure out how do we do this in the most safe yet like the fastest way, I think that will help all parties involved.
So, in the current state of affairs, so this is obviously an ideal
Yeah.
state that all of us envision to
Yes.
have one
Yeah.
day. But in the current state of affairs, have you seen any company or any specific industry doing very well in terms of managing the regulatory uncertainties part of it? Is there any specific example that comes to mind?
So I think, so how do you define doing well here, right? So in my definition, it would be, hey, you're able to go about your day-to-day business without any hindrance, right?
Yeah.
So most of the fintechs that have ended up becoming a regulated entity in one way or the other by acquiring a license, acquiring a company that has a license, and
Yeah.
merging those businesses have ended up kind of really
Being
doing
okay.
well, because
Yeah.
you're not basically looking for another party to solve your problems. You're basically solving your own problems. And I think they're able to move much faster because they're now able to. And for example, let's take a lending example, right? There are a lot of large fintechs who have acquired an NBFC license. Now, although their own loan book could be very small, they're able to get into very effective co-lending arrangements,
Right.
which are helping them to disburse loans at a much faster pace.
Correct.
There's also, I think it's better for the ecosystem because there's a diversification of risk.
Yeah.
Earlier, there was this whole concentration of risk onto a single balance sheet
Right.
or a single entity, but today that's being spread. And if you look at players that have really scaled up, I don't really want to take names here, but a lot of the huge players in fintech have now ended up getting into a great system which is working for them, and they're able to disburse thousands of crores of loans every month.
Correct.
And I think the only thing that they will figure out eventually is, okay, we've figured out how to disburse, how do you collect the money back, and how do you reduce your NPAs. But a lot of the NPAs baked into the pricing already.
Correct.
So hopefully it works out well and it becomes a profitable business that fintechs can really build and scale.
No, yeah, I think that is definitely one way to deal with it now. And good thing is that although there are very new innovative solutions that keep coming up, there is always some tangential relation to some existing license or some existing regulation which can be
Yeah.
foreseen, and at least
Yeah.
being aligned with that
Yes.
in the short run
Yes,
or the
yes,
mid run
yes.
can definitely help.
And the other thing I've noticed is a lot of the larger fintechs have now started to take very conservative calls.
Yeah.
So earlier they would take wild bets,
Yes.
right? And they would be like, "Okay, let's do this and let's figure out if we run into problems
Yeah.
later, how do you solve it?" But today they've kind of become very, very conservative, right?
Right.
So unless there is a complete regulatory green light, a lot of them don't want to do it
Yeah.
because they've realized that the damage that bad PR does to you is very significant
Exactly.
as compared to, oh, you have a fantastic flow which reduces, let's say, my onboarding journey by multiple clicks and it's much easier for me as a user. Does not guarantee them business, but then
Right.
if they are stuck with bad PR, it is a guaranteed loss of business.
Correct.
So because of the nature of the business, they have to take a call to be more conservative.
Exactly. And a lot of times all these jerks sort of end up putting a damp on all the effort that you've put in, right?
Yeah,
Just when you
yeah.
were about to launch, or just
Absolutely.
when it was
Yeah.
about to go big is when you have to
Yeah.
stop. So it doesn't make sense.
Yeah, yeah.
How do you at Decentro look at innovation? And since you have a generalist role, you'd like to understand what exactly do you look at on a day-to-day basis and what excites you the most?
Sure. I think in terms of how do you look at innovation, right? It is about there are constraints and everybody has access to the same set of information or everybody has access to the same reels.
Yeah.
Um, I think the innovation now that's coming up in the industry is only about how do you incorporate what's available and what's accessible, but not readily available or not easily available, uh, into products to make it, let's say, incrementally better. So I don't think you're going to see, and this is like a completely personal opinion because of things going on, I don't think you're going to be able to see a company coming in with a big bang new offering. Hey, nobody has thought about this before. There is A, there is B, let's combine it, let's make it C. I don't think that's going to happen. This happened in 2020, 21, 22, but I think those days are behind us now. In terms of basically just making whatever's working for you today incrementally better, I think that's where the innovation is coming in. So in terms of cost saving, in terms of simplifying the journeys, in terms of reducing clicks or being able to get more data from the same number of inputs,
Yeah.
is probably going to be the game, and that's where everybody is going to work towards, all of us included, right? In terms of my role at Decentro, although I'm a business generalist, I think it's been very heavily focused towards business development, which means that I need to bring in the revenue for the company. But in a market where it's so competitive and you're in a way operating a commoditized product, I think the difference comes between how do I solution the product for you versus how would somebody else do it.
Yeah.
So I think for us, the differentiator has always been how do I understand my customer? What are the objectives that they are working with? How can I help them advance their objectives?
Okay.
If I'm able to come to you and really understand your business and give you a solution that works for you, I think that comfort and the relationship that gets built between me and the customer is really what drives business.
Correct.
So overall, I think it boils down to really understanding what's happening in the market. So that means you have to be abreast with the latest KYC master directions. How do you do video KYC? How do you do normal KYC for a lending product versus savings account versus, let's say, a prepaid card, right? For example, you need to understand all of this. You also need to understand that, hey, there is this person who's operating a business spending probably 800 rupees to acquire a customer, spending another 50 rupees to do the KYC and everything else. And they want to be able to convert that 850 rupees investment into business for them.
Correct.
Right? So how do you reduce that friction for them? So it is about balancing UI UX with compliance and regulation. And how do you find that best path for them? And I think that's where the market is heading towards. You're not going to, although a commoditized market will have a price war, but we've realized that it's not the be all and end all. So I have been able to give you a better solution, albeit at a slightly higher pricing than you would get out elsewhere. But people have ended up working with us because they know it.
Right.
There have also been situations where I've been able to understand, because I've worked with 2 or 3 players in the space, I've been able to understand what happens as they scale up the business. And that context really helps me to solution much better for the next set of companies. Because they know that, hey, they have seen this play out with larger companies, so they'll know how to handle things.
Right.
So all of these help.
Yeah. No, I think especially in service businesses, it just can't ever be commodity, right? The way you service a client, the way you approach them, the way you solve for them, the way you provide the support end of the day, all those things go a long way.
Yes.
So relationships definitely help a lot over there.
Exactly. So I think you just have to be the best person that is readily available for them to pick up the call and say, hey, Raunak, I have this problem. How can I solve it?
Yeah.
And they need to trust that Raunak will know what is to be done.
Right.
So if I'm able to build that trust, then I think I've done my job. The rest follows.
Yeah, correct.
With a little bit of nudging and prodding and negotiating and all of that, but it follows.
Yeah. So building on that, there are already 3 solutions which Decentro has launched. What exciting or what interesting is coming up next?
I think exciting is stability right now, right? So being able to run a smooth sailing ship being able to sustain over the next couple of quarters and years, building a profitable business, I think that's what is really exciting today.
Okay.
Very different from what it would have been 3 years ago.
Right.
I think that being said, we are entering this new phase where we have matured, and the Decentro product has gone through its teenage years, and it's come out and it's now going through its youth phase, right? And where we have this huge market that we're able to potentially serve, and we need to figure out how do you navigate the market and how do you end up capturing market share. So we are in that stage of the journey as of today. In terms of innovation, I think it would be unfair to not talk about AI.
Yeah.
Everybody is looking at how do you implement AI into whatever.
Correct.
Right? And I think one aspect or one avenue where we've really been able to do AI is on the debt collection stack.
Okay.
Because we've been able to now bring in voice bots which are driven by AI. So there are so many use cases where there's a conversation happening between, let's say, an individual and an agent, and this agent could be a human agent or an AI agent, right?
Yeah.
So a lot of your educational calls, a lot of your reminder calls can be automated.
Right.
And your human agents who really build this collections muscle, they really know how to talk.
Right.
They know how to handle a case where money is not coming in.
Correct.
They focus only on the really troublesome cases.
Correct.
So it's improving their efficiency overall. And it's also kind of helping large lenders who've got tens and thousands and lakhs of borrowers reach out to everybody at a fraction of the cost.
Right.
And manage it. So I think that is something that we've just announced, and we'll be announcing more in the coming few weeks. So one is, I think, that apart from that, in terms of the very regulated KYC and the payment space, same old, right? We're kind of going ahead with. I think, like I mentioned, just how do you be smart, right? How do you improve success rates? How do you figure out how to, let's say, lower TATs? How do you give more data? That's what's going on.
Okay.
That's what's exciting for us right now. But yeah.
So Raunak, I have one interesting question. What do you think are some of the recent developments happening in the fintech space in India, which will put us on the global map, and why?
Yeah, sure. I think this is something that really excites me. Because as Decentro is a payment aggregator, we are very heavily focusing on UPI. So the kind of work that NPCI is doing to build one public infrastructure and to scale up the infrastructure that they've built across the world is super, super exciting. So just to kind of give you a little bit of context, right? In the month of September 2024, India did 15 billion UPI payments.
Yeah.
Right. And I think if you look at the overall market share, the UPI market share has been gaining month on month.
Right.
And it's eating into the cards space.
Net banking.
So this is where companies like Visa and Master have built a fantastic global business where today global payments cannot happen without them.
Correct.
And today we're sitting on the cusp of an Indian company bringing a brand new innovative solution. And who's taking this solution across the world.
Yeah.
Right? So UPI has been plugged into 7 countries.
Yes.
So as an Indian today, you can go to, I think, France, you can go to Singapore, you can go to UAE, and you can pay using UPI.
Right.
So that's fantastic. The whole world is really looking at us and understanding, hey, how can we replicate what India has been able to achieve?
Yes.
And I think the inspiration for a lot of us in terms of early fintech operators has been China, right? They've been 99% of their economy runs on digital payments.
Right.
So seeing this homegrown solution really capture everybody's imagination and trying to understand how they can replicate this is, I think, something that tells you that, hey, you've done some fantastic work.
Right.
And I think you're now eating into the Visa and the MasterCard share. So for example, we did 15 billion transactions. Which is, when you scale it up annually, it's close to about 180, which is almost 60% of what Visa processes in a year. So one company, NPCI, is doing what 60% of Visa does.
Globally.
And globally, exactly, right? So just think about the opportunities.
Yes.
And this means that as more and more people in India start buying smartphones, start having internet, and start getting onto the UPI bandwagon, this number is going to increase.
Correct.
As more and more countries start, this whole network effect is being built
Yeah.
by our own banks.
Yeah.
So I think that's super exciting. I think apart from that, they're also working on cross-border players. They're also working on credit lines. They're also helping basically companies to interoperate. Like, let's say I launch a RuPay credit card, I can access the UPI network. So now you have the form factors which are interchangeable.
Yeah.
So, and there's no dependency on any sort of instrument available at the merchant side, right? One QR code which is like printed 3 years ago does your job.
Yeah.
So I think today, when you think about the kind of opportunity this presents and the kind of data that you're able to generate, and now RBI is talking about ULI, where we'll be able to leverage this data for better underwriting.
Correct.
The kind of possibilities it opens up.
Yeah.
Although you have to be a bank or you have to be a regulated entity, you have to be big for that.
Yeah.
It's a big boys game, but the kind of possibilities is super exciting.
Yeah. Yeah.
So if you're doing any sort of thing in that side of the world,
Yeah.
I think your feet should be tingling and you should be trying to understand how can you scale these products and how can you really go fast and cover up market share.
No, absolutely.
Yeah.
And in fact, these days you see every other app launching their own UPI, right?
Yeah.
People are really getting onto it.
Yeah.
And with the expectation that the limit of UPI will also keep increasing.
Yeah.
This will keep gaining more and more
Absolutely.
importance for a
And
user.
it already has, right? So, for example, if you're doing, let's say, an education payment and stuff like that, UPI is now allowing you to do it more. So, it's only a matter of time.
Right.
And it's just a very proven model that is now scaling up.
Right.
And that's what is the best part about it. So, it's just multiplication of what's already built.
Correct.
So, mind blowing, right?
Yeah.
Something that didn't exist 10 years ago.
Yeah.
Today is changing the world.
And we can't imagine our daily lives without
Exactly,
that
right?
tool.
And India has been able to do this. Now we're doing it for payments. We've also done it for telecom. So I think this leapfrogging that we do on tech is what is really, really interesting and should keep the world on their toes.
Yeah.
Because while India can look like, okay, we're not doing something, but it'll be very easy for us to catch up.
Correct.
At a later stage.
Yeah. No, every decade there's a technology which India is bringing out in the world, and it's really putting us on the global map.
Yeah. So I think, and if you're an employee working at NPCI and figuring this out, you've got like a very exciting and very amazing job, right?
Exactly.
Yeah. So it's good for all of us.
Yes, absolutely. Great. Thanks a lot, Raunak. This was very insightful. Before we part, I'll also love to ask my favorite question, which is,
sure.
what is the book that you're reading right now, and what's your normal genre of interest?
So to be very, very honest, I am trying to pick up the habit of reading right now.
Okay.
So I have like a bunch of books on my bedside table and I try to read. So I think the book that I'm actually currently reading is Deep Work.
Okay.
And the reason I'm doing is because I often realize that because of being bombarded by reels and shorts and stuff like that, your attention span has come down so drastically and it really has an impact on your everyday work. So it's very fascinating to see the kind of topics covered in the book where people have been able to shut themselves off from the world and really come out with groundbreaking ideas. So I'm trying to figure out how I can implement some amount of that into my daily work. In terms of other books, I think I have a wish list that I want to read. So after Deep Work, the next one that I'll be picking up is Atomic Habits. I think that's like a rite of passage. Everybody reads it. The one after that, there's a very interesting book called Never Split the Difference.
Okay.
About how do you negotiate better.
Okay.
So maybe coming, I should be done with that by March. So we'll be able to renegotiate our contracts better next year.
I think then we should also come prepared reading that book.
Yeah.
So great. This sounds very exciting. And thanks a lot again for coming.
Absolutely.
Coming
My pleasure. Thank you for having me.
Yes, it was wonderful and very insightful listening to you.
Yeah,
and hope our audience also loved listening to this session today. Any last words before we wrap it up?
No, I think just keep hustling. Let's figure out a way to build profitable businesses and get exits for founders.
That's what this is all about.
Yeah.
Great. Thank you everyone for tuning in today. Hope it was a lovely session for you as well. And we'll catch you in the next one. Bye.